What a week. Yellen, Bitcoin, China, dead cat bounce, and more. What's up, everyone? Welcome aboard to Bubba's Bottom Line. And of course, it's always great to be here with you over the weekend. And what a week. We were pretty much on top of it the entire week, but a lot of things went on, and I think a lot of things fell according to plan as we would normally look at them. And I think the first thing we would realize is that, of course, China is going to come to the table. That was, I think, probably the bigger story of the week, and that might have been what helped finally push the markets a little bit higher. But were the markets really being pushed higher because of China, or was it really just a dead cat bounce? We will look at this as purely a dead cat bounce. This is nothing more than a market that was well oversold, that had a dramatic bounce. And of course, we can make whatever excuse we want to say why it rallied. The bottom line is that the overall view of the markets have not changed. The overall economic situation has not changed from when you look at a fundamental and the technical parts of the market. The markets are stocks are making more new lows than are making new highs. Look at what happened to Apple on Friday. It got clobbered. So again, you can listen to everybody try to convince you that it's the buy. And again, we're not saying that you don't buy the market. Okay, this is where you decide as a investor or a trader what you're going to be. If you're an investor, then there's no reason not to buy, as long as you're buying strong fundamental companies that you assume that will be in business 10, 15, or 20 years from now. If you're a trader, I think, buying for any more than a few minutes based on a big dip is a mistake here. This market looks like it wants to head lower, and all signs are pointing to we're going to see lower prices. On Friday, we had a big jobs number, okay, 250,000 print. Now, again, back in the old days, that wasn't that big. But in today's world, 250 is a big print. So we had job increases, we had salary increases, and things are booming ahead. And I'm not unhappy about that. I think that's great that the economy is doing well. But the first thing we have to remember is that the economy and the stock market are not related. Just because the economy is good does not mean the stock market's going to go up, and just because the economy would be bad doesn't mean the stock market's going to go down. At some point, the stock market itself is a forward-thinking indicator that is telling you that there is trouble coming in front. And of course, Apple's earnings, with their guidance of what they talked about, is telling you that they foresee some problems. So we don't look at the China potential trade. We have said on this program since the beginning, okay, since this first all came out to the front, was that the United States and President Trump would get this deal done to the satisfaction of our side of the equation. And I think that's what you're seeing. Now, again, nothing's going to happen between now and the midterms, which are Tuesday. But China is going to have to come to the table because, again, if you look at what's going on with their market and what's going on with their economy, it's collapsing. Now, they don't have as great a regard for their people as they do here, so you can see that they will suffer, but eventually they will come to the table, and that's the bottom line. And finally, potentially, we will have fair and free trade, okay, around the globe. Now, again, is that a guarantee? No, but I would think that's been our posture and our stance from the beginning, is that we would get to a point where we would get fair and free trade. Now, if we could only get it in the markets, okay, and get the Fed out of the way and this manipulating body out of the way and have fair and free trade where asset classes actually price themselves, that would be even better, okay? But for right now, we're working on foreign trade and fair and free trade there. So we're going to see a deal. That's obvious, okay? And again, it's been obvious. Now, that did take and push grain prices much higher on Thursday when the first announcement came out. They cooled down a little bit on Friday, but again, we made nice moves. And of course, we saw soybeans come back from lows and push up towards $9 in January. We had wheat come from the dramatic lows and push back into that consolidation. And of course, corn broke above our 370, looking to 380. And of course, we are big fans of the commodity space here because we believe that the equities are going to take a much bigger haircut here. So with the haircut in the equities will bring in new money into the grains and other agricultural spots. So again, as we have said, and we will not repeat again today, well, maybe we will. But again, we're not worried about the trade war and not thinking that that was the reason for the rally. The reason for the big rally, okay, is we had a market that had been down 5 weeks in a row. And of course, Monday was ugly. So you saw the turnaround and the dead cat bounce Tuesday, Wednesday, and then Thursday, the big peak up, okay? Now, was the peak up because of the China thing? Or was the peak up because like the Thursday before, traders and investors were thinking, well, let's bet on Apple's earnings, okay, because that was what was happening. Let's put this big rally together so we can get in front of it, knowing that there's going to be a good jobs number on Friday. And of course, what did we see? We saw dramatic failure once again. Apple falling, I don't know, about 7 or 8% on Friday. Okay, so again, everybody tried to get in front of the tape, and of course they got it stuck up there. You know what? Once the tape failed, all right. So then you come up with the jobs number on Friday. So what does that big jobs number mean going forward? Well, I was actually trading live with many of you, as you know. We're having our futures class, and I said immediately when the number came out, this is not good news for the stock market. Why? Because what it means is that the Fed is going to have to raise rates faster. You know, no matter what President Trump says or doesn't say, the Fed is not going to stop what they're going to do. And in fact, his comments may indeed speed along their willingness to want to hike rates here. You know, this is one of the things that we talk about, that it's not political. It is political, okay? And you saw the accommodative posture for all those years under President Obama, and you have seen the direct opposite now under President Trump. And of course, the economy is still steaming forward ahead. So you can see that the markets actually can digest higher rates. But this shock wave that might be sent through, okay, would bring us into rates that are continuing to rise. And I was on air with somebody on Friday. They were talking about, well, the nominal rates are zero. You know what? I can't get through all this fancy terminology and what these experts want to tell me, okay? These economists couldn't find their, you know what, with a flashlight, okay? And of course, they'll tell me 10 years from now, they'll tell us, well, this was a recessionary period. I'm saying today that we're going into a recessionary period, okay? I'm not waiting 10 years to try to figure this out. I'm telling you today that I think we're going into a recessionary period. And all the experts in the world that can kind of read that playbook that they want to go through. Now, we all know one thing, okay? Playbooks and books are great guidance. They give you a general idea. They're great for teaching in the classroom. They're great for moot court and all these other things that we do. But when you get into the real world, none of this works. You have to be able to have some opinion and have some common sense on how to figure it out when it's actually happening. And I think this is the problem, the manipulation that we've seen over all these years of the currency and of the interest rate markets and everything else is finally coming to roost. So I think you're going to see the yield curve going to start to invert, okay? Recessionary. You're going to see faster hiking rates. And again, there's nothing wrong with it. I think that higher rates are actually better because we have said, and I got into this beef on Friday with BNN BNN Bloomberg out of Canada, about, well, what was causing the overall problems in the markets. And I said it's because the rates are going higher, not because of the trade. And again, everyone wants to make it about trade. It's not about trade. So here we have, okay, great jobs, which means, okay, the economy is good. So now interest rates are going to go higher. So as we've said for the last couple of weeks, company earnings, company guidance is not going to be as good going forward, because they're going to have higher costs. So their profit margins, higher cost equal less profits. It's pretty simple, right? Again, we can try to get all these fancy formulas going. Higher cost equals less profit, okay? Higher wages equals less profit. Now, again, that's a good thing. The big companies have made enough money and had it up so big for so long, it's about time that we saw some cutting in some of their profit margins, and they actually shared it with the employees. Now, I'm thrilled that they're having to share with their employees, not through a mandate from the government of what the minimum wage should be, but basically put on because of a supply and demand. This is what is called, is called price discovery. Right now, there's an oversupply of jobs, so the workers now can command a bigger salary. Very simple, So that's what we're looking for here now. So the supply-demand curve is now there's too much demand and not enough supply, so they're going to have to pay more. Isn't that the way it should be without having a mandate? And isn't that the way that asset classes and free markets price themselves? If they would let the rest of the economy do this, it would be wonderful. But of course, the Federal Reserve does not like that part of it. They want to have their grabby hands on this economy and keep it going. This is why they hate the cryptocurrency so much, is because it takes the control away from the Federal Reserve. This is why you have now Janet Yellen, the dove in chief, used to be the dove, the one of the biggest bubble builders we had, now saying, well, she doesn't like the cryptocurrency, she doesn't like the Bitcoin. Why? Because it takes away the power of the Federal Reserve. It takes away their ability to manipulate currency. It takes away some of the power from Congress because, again, even though the Fed is supposedly a private organization, there are some influences that go on. And again, this is why they hate the crypto world. This is why they want to stay on top of everything, because really what they're doing is they're draining the middle class. That's really what it comes down to, because they continue to shrink the value of the dollar. Again, I urge you, if you've never read The Creature from Jekyll Island, you check it out. I think it's got an interesting story, and I'm not saying that I believe everything that is written in that book as well, but I think the conspiracy theory, and I think if you go back and look at history, I think a lot of the stuff that is done and said in there makes a lot of sense. And one of the biggest things is goes back into this fractional banking and shadow banking and all these fancy terms about banking. My personal opinion is I do not think that the banks have enough dough to back up the loans they have outstanding. I happen to know and understand that banks are buying a lot of loans again. I think that we're going to see a repeat of the last loan bubble, because usually it does come down to debt, and that is usually what the big problems are here. So again, when you're lending, when the Federal Reserve creates more money and they've got a $4 trillion balance sheet, and then you allow banks to lend out at 10-1 on money that they really don't even have in reserve, so they're lending out even at higher rates. Again, that's an opinion. But all of a sudden, you have all this money flooding the system, which really makes your dollars worth less. So that becomes the bigger problem. And of course, that will become the big flush. And the continued belief by the big banks thinking that the Fed is going to be there to bail them out, to me is a crock. To me is a joke. And I really can't take it anymore. Why should a bank be different than any other business? Why should they get special treatment? That to me makes absolutely no sense as well. So, but they do get special treatment. They did get special treatment in 2008, and they should be out of business. They should have bailed out the depositors and given everybody who had their money in the bank, given them their money back, and let the banks go bust and bring in and let new people who actually want to run a business like a business, instead of knowing, why shouldn't I buy all the loans I can right now? I get to profit a lot of money, put it in my pocket. And if we go bust, we call the Federal Reserve and say, hey, we're bust. I mean, really, you think about that. In the meantime, this is Bubba's Bottom Line. Todd Bubba Horowitz. We're going to step out here for a break, and we will be back with more after the break. Bubba's Bottom Line. Hey, everybody, what's going on? I just want to remind you about our high school investing program. If you'd like to help us out, highschoolinvesting.com. You can go to Patreon, patreon.com/Bubba Trading. And of course, one thing we're doing is we've now stopped the Bubba Show. We're going to start doing some long-form video interviews. Of course, you'll be able to watch those. And if you'd like to be one of the subscribers to that, we are starting something new for $4.99 a month. So you can check that out at BubbaTrading.com, or you can check it out at LibertyTalk.fm. In the meantime, let's get back to Bubba's Bottom Line with me, Todd Bubba Horowitz. Welcome back to Bubba's Bottom Line. Todd Bubba Horowitz with you. And of course, so, we talked about the bank and we talked about the Fed, but the markets themselves, again, you're seeing a lot of reasons to believe that we should be going lower, and we're going to go lower. Now, if I were to script it, and again, obviously, I cannot script it because it's impossible. But what I would expect, okay, I would expect to see some selling the next couple of weeks, probably into Thanksgiving. And then I would expect to see the Santa Claus rally. But I think the first quarter is going to create some real nastiness. But I will say, in my opinion, the highs are in for the year. And I would say, in my opinion, the markets close lower for the year, not necessarily lower from here, but lower than obviously for the year. I think we get a negative return, in other words. So I think that's a problem. I think, again, we continue to try to make things happen. But if you take a look at the charts, okay, the Dow, the S&P, both bounced from exactly where they should have, as did the Russell. They were both getting drilled and getting pounded as if there was no tomorrow. So you know there's going to be bounce. We said it last week on the show. Expect to see a dead cat bounce. Expect to see a rip your face off rally. That's what our expectation should be here now, is to look for opportunities to sell these rallies. You don't want to be buyers into these rallies. Remember this, okay? When you have these powerful rallies that look so good, they always come in bear markets. They always come in markets that are headed lower. The force and the power of these rallies is created by the people that get caught short, the short covering rally, trying to come in. And short covering rallies are like rats trying to crawl over themselves to get out of something. They'll fight anybody and they'll keep chasing it up. And of course, you get these enormous moves. Go back and look at the last 10 years of the bull market rally. We didn't have these fierce, straight up rallies. We had grind rallies that sucked down the volatility and market just went up every day. But they didn't have these huge, wild swings that are going up. That is the perfect sign of what they call a bear market rally. And until proven otherwise, we will assume these to be dead cat bounces, bear market rallies, rip your face off rallies. And we will be selling these rallies until. Now, again, that goes very similar into, as you know, we got stopped out in our crude oil trade a number of weeks ago, but we said we still wanted to get short. We just needed another level. Well, we had another opportunity. Well, look at now crude. Now crude's in a bear market almost. It's down almost 20% from its highs, okay? So again, remember that the patterns repeat no matter what you're watching, okay? All patterns are the same. All markets are the same. All patterns repeat themselves. And the short time frames always have to resolve themselves out to the longer time frames. That's the way the markets work. Nothing has ever changed in the history. So if you think about it and go look at it, you'll see exactly what I'm telling you is exactly right. So you had oil is now broken down. And of course, we always talk about gold. Gold, we said, would look to be a breakout. And it has now broken out. 1180 held. Now it came back through 1220, but went back above it. So now I think we look to break out through 1240 and up to 1275 would be the next target. Notice how I'm not calling for 10,000 gold. We look for gold. Any commodity, any market, we try to talk one level at a time. Because again, that's all that we can really see. We can try to imagine and make up these numbers about what we're doing and, use all these fancy formulas to project out and, well, it's half the retracement of this and boom, boom. I can see one level at a time. That's what I'm willing to talk about. I like to talk and move one level at a time. So that's what we look for. We look at one level at a time. So now we look for gold to work its way higher. It looks like the grains, as we talked about earlier, have all bottomed out. Look for a big move in wheat here. I think the meats look really solid. I think probably the chance for the biggest explosion up would be fat cattle or live cattle, although we like feeders down here at those levels. Hogs probably would be a little bit sideways for a while. I think that you've got some, it has made its big move, so I'm not concerned about that. I think that is good, and now I think we look for higher prices, but I would not be surprised to see some sideways action. I think the action's been really solid in the crypto space. Again, we haven't gotten pounded. We've kind of held up, and remember, you've got a lot of people out there trying to talk this stuff down, yet it just holds up. And that's why we talk about the true advantage of a free market, okay? The cryptocurrencies are a free market. They are manipulated by nobody. They get priced based on buyers and sellers, okay? And so that is truly that is what I would hope for all of our markets. would not have this interference, which is, again, why we said earlier why the Fed hates them. But they have held up extremely well, okay? And I think this is something to look at. And I think some of the things that you see here is a lot of the political violence that is bringing in some issues, and it's going to bring issues into the markets as well as everywhere else. And I think that, you know, again, you have so much of this manipulation going on, which is why we really want the free markets to come back into vogue, okay, which have really been destroyed over the years based on what the Federal Reserve has done. Because again, it's more of a dollar and cents game. It's a money game versus actually a free market game. And I think that's something that we should look at. And again, you know, have you realized that the S&P 500 for the last 6 or 7 weeks has been more volatile than the cryptocurrencies? Okay. So I always wonder, you know, I always get pissed off when I hear the street and I hear the pundits and I hear the experts talking and the advisors talking about the algorithm trading. Okay. Now, I'm sure I've done this here before, but I'm doing it again. Okay. Algorithm trading has nothing to do with the volatility. Volatility is at lows, even at 20% volatility. Okay. Trading used to trade, the 20-year moving average is about 22 or 23% of the VIX index. So let's not get fooled by the pundits trying to blame when the markets go down on the algorithms. You know, algorithms work both ways. They don't just have sell algorithms. They work on information, just like you and I do. So they're going up and down. The things that the algorithms and the Speedy Boys, and this is where I have a total disagreement with Michael Lewis, of course, with the Speedy Boys as well, and I call what he wrote a crock. Okay, but without the Speedy Boys, without the algorithm trading, without the computerized trading, you would not have the commissions that you're paying today. Okay, you would not have $3.95 or $4.95 or $2 or whatever it is you're paying. Okay, the reduced discounted brokerage is brought to you, thankfully, because of the Speedy Boys, because of the amount of volume that they've churned out. The Speedy Boys have done nothing more than replace the market makers. Okay, they make markets. You have the narrowest markets you've ever had. Okay, most, you know, the big stocks are one tick wide, 1 penny wide. So all of a sudden you're going to tell me that they're the creation of this. The difference between today and 20 years ago, before all the Speedy Boys came in and all this trading came in, is that you used to have to call your broker. Your broker would have to call the floor. The floor would get their floor broker, and it would take a little more time. Today, you sit at home and you can push your own buttons. So it's not the algorithms that are written for the Speedy Boy traders. It's all the individual traders that are now panicking by themselves, okay, and have the ability to execute by themselves right now. So you have all this order flow going in at one time. I guarantee you that it's no different percentage-wise than it was in 1987, when I was actually trading through the collapse of 1987. It was just as fast. The difference is now everybody can execute at one time, okay? And that means it's not just the algorithms. The algorithms are the algorithms. They go up and down, just like they did back in 1987, okay? There was algorithm trading in 1987. It wasn't as fast, but that's because we didn't have as powerful computers. So now you have the same thing. But the difference is that everybody's like a market maker. Everybody's got access to the trading floor by pushing a button. That's what the problem is, and that's how we create all these things. So again, remember that your best friends are the algorithm traders, because they're the ones that keep these commissions and these prices lower. They're the ones that allow you to trade more often and more freely in a more truer free market. This is it. We're going to step out here for our final break. This is Bubba's Bottom Line. Todd Bubba Horwitz. We're going to come back with my commentary after the break. This is Bubba's Bottom Line. We'll be right back. Hey, everybody. Just want to remind you about our high school investing program. If you'd like to help us out, go to Patreon, patreon.com/Bubba Trading. That's patreon.com/Bubba Trading. We'd really like to keep it going, but it's getting really to be a challenge and a little bit too expensive. So if you'd like to help us out and help us continue to educate and with some financial literacy, our high school kids, please go to patreon.com/Bubba Trading. Now let's get back to Bubba's Bottom Line and my commentary. Welcome back to Bubba's Bottom Line. Todd Bubba Horwitz, and of course, as you know, I have an opinion, and I have a lot of bitching to do, but it is the midterms, and my first thing here is I don't care who you vote for. I would like to see you get off and go out and vote. Again, I have my opinion who I'd like to see win, but more importantly, I would like to see everybody go out and vote. Whoever you want to vote for, vote for. Again, I'm not going to tell you who to vote for. I want you to just go out and vote. We need some severe changes here. I think that the political system that we have here in this country today is broken down. I think that, unfortunately, the one solid guy in the political system, and I'm sure there's more, is President Trump. And again, I know many don't like him, and I don't care if you like him or not. You don't have to like him. You want him to succeed. But I think the real problem here in what I see, okay, is that he's an honest guy, and he's not trying to get a piece of all your money. And I always ask this as we get closer to elections. Why do we have to have so many lobbyists? Why is there so many queer deals going on at the same time? Why would a person spend $50 million of their own money, $50 million of their own money, to get elected to a $200,000 a year job? Now, somebody has to explain that to me. It cannot be. I understand why somebody wants to be president, okay, because that is your God. You want to be the king, and I get that, okay? That's an ego thing. But why would any person, and I know a couple have done it, but why would anybody spend $50 million of their own money to get elected to a $200,000 a year job? To me, the logic doesn't make sense there. I have never seen, and again, I don't know all the politicians, but the ones I've seen, I have never seen anybody who cared that much about the country to really make change, okay? I see a lot of people using BS lobbyists to create undue happenings and create bad things for the American people. I see a lot of things going on right now that certainly is a matter of happenstance. We've got the caravans coming in. We had those bombings, those things being sent out. Isn't it amazing how they happen right before the midterms? Okay, I'm telling you that A, get out and vote, but B, ask yourself the question, why would somebody spend $50 million for a $200,000 job? And C, isn't it about time we get term limits to get rid of some of this trash that's been around for 100 years? Are you not tired of looking at some of these guys or gals that have been there that look like they're ready to fall in anyways? I mean, one foot on a banana peel, the other in a grave. I mean, is it not time to get back to an America where we actually have people that really want to work to make America great, okay, from the inside with term limits, and to get rid of all this crap? Because quite frankly, I'm sick of it, okay? I can't stand the divisiveness that's going on, and I can't stand to have some of these people in there that again, have no interest in what happens to the country. They just want to kick the can down the road as they glom on and steal the cash. I don't get it. I'd like to get it. We need term limits. But the first thing we need to do is you and me, which I've already voted. Okay, I voted. You need to go out and vote. No matter who you vote for. Again, I don't care who you vote for. We need to get a movement going to get people to get out and vote. Okay, so make sure by Tuesday you get out there and you vote whoever you want for. No worries, but get out there and vote. This is Bubba's Bottom Line. Todd Bubba Horwitz. As always, I thank you. Football tonight, New England Patriots, Green Bay Packers. We're going to go with the Pack tonight. The Pack is back. Have a great weekend, everybody. Thanks so much. This is Bubba's Bottom Line. We'll see you later.